If you look at my filings, you can see that we have a position in Alibaba.
Hello everyone, how's it going? In this video, we're going to know what is happening with Alibaba. Mohnish Pabrai, this is the gentleman you're seeing in front of you on the screen, and this is a video that was posted on this channel called Sum Zero. I'll put in the link in the description for you to watch the whole video. It's worth watching. Basically, in this particular segment of the video, he's going over his thesis on why he purchased Alibaba. Yes, very recently, earlier this year, he did go about purchasing and opening a position in Alibaba. And here we'll shortly see what was his thesis and why he felt that the stock was worth buying. And if you don't know who Mohnish Pabrai is, he's an Indian-born value investor who follows the principles of Ben Graham, Warren Buffett, and Charlie Munger. He's friends with them on a very close level. This is the earliest or the most recent pictures right when Charlie Munger turned 96 years on his birthday. Very close. They have their dinners on monthly and bi-monthly basis. He also attends their internal meetings over at Berkshire Hathaway. So very close to the main guys. Now, coming back to this particular video. So we'll try to understand what his point of view is. And from Mohnish Pabrai, his major takeaways are the company should be cheap in the sense that the earnings, the PE ratio should be very low, the valuation should be very low. So he buys cheap and he's a long-term investor looking for the value of the company. So let's get started.
If you look at my filings, you can see that we have a position in Alibaba.
Mm-hmm. And yeah, we'd love to talk about Baba because that they're in the news all the time, and they're competing head on with kind of U.S. big tech. They also have Chinese tech to compete with Tencent. So, what's your overall thesis with Baba?
Well, it's an incredible business. Just if you look at Baba and Tencent and kind of where they're at and the ecosystem and the moat and what they control and all of that. Look at the tailwinds from China. There's a lot to me to like. Even more than the large US tech, just because I think that the tailwinds are so much stronger, and there's some serious barriers to entry. But on the other side, it cannot do what racers can do. What I'm saying? I buy a 20 million market cap, which has liquidation value of 800 million. That's a 40x.
Right.
And it's a 40x with no future value creation, just the arbitrage of price and value. I think here there is obviously going to be much larger revenues and profits and such in the future with all the different things they have going on. But you're starting from a very large base, mm-hmm. right? So 600 billion plus market cap. It's very cheap. I think Baba is one of the cheapest plays out there.
What do you think the Chinese regulatory issues? Do they ever get past those, or do you think that's just part of doing business in China?
I think Alibaba is a crown jewel for China, just like Tencent is a crown jewel for them. So I don't think they will want to do things. These are the plays that have the possibility of global footprints, that they can get there. So I don't think the government is going to take an approach which is going to kill the golden goose, if you will. Mm-hmm. So my take is they've extracted their pound of flesh, and they've sent a pretty clear message who's in charge and such. So I don't really expect much more than what we've seen already.
I'm glad this question was asked because this is the number one issue that's facing Alibaba right now, especially the regulatory issues that are coming from the Chinese government on these Chinese tech companies. And this is the main reason why people are not investing in the company or even thinking or being afraid about entering this. This question was also asked by Charlie Munger in his annual shareholder meeting on the Daily Journal, and he gave a similar response in the same context. Let's go back to the video.
Also, the other thing with Alibaba is that in the in the long term, I think a lot of the value creation for them is cloud, which is non-existent from earnings perspective today. They have some scale, but they're the number one player. But I think that when you look at Amazon's numbers, and Amazon's numbers with cloud are somewhat misleading because they dump their internal cloud expense in there. So actually, 50 billion revenue and 15 billion net income is actually understated. So I think they're making more than 15 on that because they're growing as well. They're investing in all the future growth. So the cloud margins are incredible. And the issue with the cloud is that very few people can play. I mean, in the US, the game is for the most part over. You've got the players, and they will. It's hard to even see them even changing the position they're in.
Have you looked at Baidu at all, as far as Chinese names go? Just kind of post Archego's blow up, was that something on your radar?
Yeah, I think that to me the DNA of Alibaba and Tencent is what is unusual. I think Alibaba and Tencent have very unusual cultures and DNA.
Do you prefer Baba to Tencent?
They're